You've heard the stories, right? The idea that you can become a millionaire just by saving the money you'd normally spend on a coffee. I know, it sounds a little too good to be true, kind of like a financial fairy tale. But what if it's not? What if there's a real master plan hiding in your pocket change? Well, today we're going to break down the numbers and find out. So let's just cut right to the chase. The big question: can you really actually build $1 million fortune for the price of a daily latte? I mean, day to day, it seems impossible, right? But stick with me, because the long-term answer is probably going to shock you. All right, here it is, the bottom line. If a 22-year-old invested just $5 a day until they turned 65, they could, and this is based on historical market returns, end up with over $1.1 million. Yeah, you heard me right. Over $1 million from what you'd spend on coffee. So the next question is, how on earth is that even possible? Well, the answer isn't about being some kind of stock market genius or starting with a huge pile of cash. Nope. The secret weapon is a single, incredibly powerful concept. It's all about leveraging the amazing, almost magical force of compounding. And hey, don't just take my word for it. This idea is so powerful that Albert Einstein, yeah, that Einstein, reportedly called compound interest the eighth wonder of the world. You know, when a mind like that singles something out, it's probably a good idea to pay attention. So what is this stuff? Simply put, compounding is your money making money. And then that new money starts making its own money. It creates this incredible snowball effect. It's super slow at first. You barely even notice it. But you give it enough time and that silent growth engine really starts to roar. Let's actually look at the numbers here. We're using a 10% average annual return, which is roughly what the S&P 500, a basket of the 500 biggest US companies, has done historically. Now, of course, past results aren't a guarantee for the future, but they show us the potential. So after 10 years, your 18 grand in savings turns into about 30,000. Not bad? But look at 30 years. Your 54 grand becomes 330,000. And 50 years? Get this, over $2.3 million from just 91,000 of your own money. See? That's where the growth just goes crazy. It becomes exponential. And this chart shows you exactly what I'm talking about. Building wealth isn't a straight line that just goes up. It's a curve. For the first 10, maybe 20 years, it can feel painfully slow. But then you hit this sweet spot, this inflection point, and that's where your earnings start making more money than your actual contributions do. That's the zone where the real magic happens. So, okay, if compounding is the engine, what's the fuel? It's not money. It's actually something you have right now that you can never, ever get more of. It is the single most valuable asset you have on your entire investment journey, and that is time. Let me tell you a quick story that just perfectly shows how critical time is. So first up, meet Bill. Bill invests $3,000 a year for just 5 years, from when he's 15 to 19. Then he stops, cold. His total out-of-pocket investment, just $15,000. Okay, next we have Susan. She starts a bit later at age 19. She invests for 8 years, all the way until she's 26. So she actually puts in more money than Bill, a total of $24,000. And the last, there's Kim. She's the late starter at 27, but boy is she diligent. She invests $3,000 every single year until she retires at 65. She puts in a whopping $117,000 of her own money, way more than Bill and Susan combined. So, here it is, the million-dollar question. If they all got the same 10% annual return, who do you think has the most money at age 65? I mean, common sense says Kim, right? She invested the most money for the longest period. It has to be her. But the result is absolutely stunning. Bill, who invested the least amount of money, ends up with the most by a lot, around $1.5 million. He wins because he started the earliest. Those first few years gave his money the maximum amount of time to compound. It proves, without a doubt, that when you start is so much more important than how much you invest. Now, I know this all sounds fantastic, but we have to ground this in reality for a second. Getting these kinds of returns isn't about getting lucky with some hot stock pick. It's about smart, diversified investing, usually through simple things like low-cost index funds. But a lot of new investors, they get excited, they jump in, and they immediately fall into some really common traps that can completely derail the whole plan. So let's talk about what to avoid. So here's a quick guide on how to lose your money. Number 1, go all in on super high-risk bets. 2, try to day trade constantly, thinking you can outsmart the market. 3, chase those sketchy penny stocks. And 4, my personal favorite, blindly follow whatever hype you see on social media. Look, patience and discipline are what win the game, not these risky shortcuts. Okay, so we know what not to do, but what's the actual practical plan you can put into place, like today? Well, it's way simpler than you think, and the whole secret is making your wealth building completely automatic. This quote from Warren Buffett just nails the mindset shift you have to make. See, most people get their paycheck, they spend, and then they see if there's anything left over to save. Wealthy people do the exact opposite. They save first. It's a non-negotiable bill they pay to their future selves. Then they spend whatever is left over. It's all about paying yourself first. So here's your 3-step plan. Step 1, find your latte factor. And it's not really about the coffee, that's just a metaphor. It's about any small, regular expense you can redirect. Step 2, commit to paying yourself first with that money. And step 3, this is the most important part, make it automatic. Set up an automatic transfer from your checking to your investment account for the day you get paid. You see, willpower runs out. Automation is forever. And hey, if you think $5 a day is powerful, check out the opportunity cost of bigger expenses. $1,000 a month car lease might seem fine today, but if you invested that same money over a 40-year career, it could have grown into a mind-blowing $4.7 million. It really shows you that every single choice you make about spending is also a choice about investing. So in the end, it really all comes down to a choice. And it's not just about one coffee or one lunch. It's about seeing the hidden, massive potential in our tiny daily habits. It's a choice between a small pleasure today and a life-changing fortune tomorrow. The only real question left is, which one are you going to choose?
Don't forget to subscribe to the channel, like the video, and click on the bell icon to turn on notifications.